Welcome to Lender's Digest. I'm Alex Cooper. Today, we're examining a major shift in the fintech landscape that's sending shockwaves through the banking world. Apple has announced a dramatic pivot in its financial services strategy, shutting down their US-based Apple Pay Later program and replacing it with a global installment loan offering. Apple Pay Later, launched just last year, allowed U.S. consumers to split purchases of up to $1,000 into 4 equal payments over 6 weeks, interest and fee-free. It was Apple's bold entry into the Buy Now, Pay Later BNPL space, a sector that's been rapidly disrupting traditional credit models. Now, in a surprising move, Apple is discontinuing this service. Instead, they're rolling out a new global installment loan offering that will work through both debit and credit cards, as well as partnering with BNPL leader Affirm. This isn't just a minor adjustment. It's a fundamental shift in Apple's approach to financial services. Apple stated, "Starting later this year, users across the globe will be able to access installment loans offered through credit and debit cards, as well as lenders, when checking out with Apple Pay." They added, "With the introduction of this new global installment loan offering, we will no longer offer Apple Pay Later in the US." For those of us in finance, this raises intriguing questions. What's driving this strategic shift? And what does it mean for the broader fintech ecosystem? First, consider the global expansion angle. Apple's new approach allows them to rapidly scale their installment loan offering across multiple markets. They've already partnered with ANZ in Australia, HSBC and Monzo in the UK, CaixaBank in Spain, and Citi, Synchrony and Affirm in the US. This move instantly gives Apple a much broader reach than their US-only Apple Pay Later program. But there's more to this story. When Apple launched Apple Pay Later, it was seen as a sign that the company was moving away from relying on partners for its financial services business. They even set up a wholly owned subsidiary, Apple Financing, to handle loans directly. This in-house approach allowed Apple to earn interchange fees and maintain tighter control over customer data. So why the change of heart? It's possible that Apple found the regulatory and operational complexities of direct lending more challenging than anticipated. By partnering with established financial institutions and BNPL providers, Apple can leverage their expertise in existing regulatory frameworks while still expanding its financial services offerings. This shift also signals a potential recalibration in the BNPL market. Apple's entry into direct BNPL lending was seen as a major threat to existing players. Now, by partnering with companies like Affirm, Apple is positioning itself as a facilitator rather than a direct competitor in this space. For traditional lenders, this development presents both opportunities and challenges. On one hand, Apple's new approach opens up partnership possibilities that weren't available before. Banks and credit card issuers now have a chance to tap into Apple's massive user base and sleek user experience. On the other hand, this move further cements Apple's position as a key player in the digital payments ecosystem. As Apple continues to expand its financial services offerings, banks will need to carefully consider how to position themselves in this evolving landscape. It's worth noting that Apple isn't abandoning its fintech ambitions. They're still pushing forward with innovations like their Credit Kudos acquisition, which could allow for more sophisticated credit scoring models in the future. This suggests that while Apple may be stepping back from direct lending for now, they're still very much focused on expanding their role in the financial services sector. As we wrap up, it's clear that Apple's strategic shift is more than just a product change. It's a move that could reshape the competitive dynamics in the BNPL sector, alter the relationship between tech companies and traditional financial institutions, and potentially influence how consumers access credit globally. For lenders, fintechs, and financial institutions, the message is clear. The landscape is changing rapidly, and adaptability is key. As Apple's move demonstrates, even seemingly established strategies can pivot quickly in response to market realities and global opportunities. This is Alex Cooper for Lender's Digest. Stay tuned for more insights into the ever-evolving world of finance and technology.